we start with page 18, example number 4 for equity method. That's what we have. We continue this example 4 and example 5 for equity method and worksheet and income statement and all of this. That's all of this for the worksheet. You need to focus with me for this one. This one different than example 3. Example this one here, 1 and 2, and example 3 for cost and equity, no worksheet. But this one here, example 4, we have mainly worksheet, 100% ownership. Okay, mainly worksheet, 100% ownership and equity method. Okay, that means we have all of this in example 4. When I say 100% ownership, that means no minorities. Okay, you have to know this. Let me read again one by one. What do you mean by this? One by one again. I told you before you answer example 4, you need to read example 4 first. Example 4, okay, you follow me, please pay attention with this one. In January 1st, one by one, January 1st, B company, that's a B company, okay, issued number of shares, how many shares? 240 shares, which common stocks, and paid cash 1,000. That means this company B issued 240 shares of common stock, and besides this, they paid 1,000 cash, 1,000 Egyptian pound. For what reason? What's the reason behind this? Because company B, for all shares of Alphabet. When I say all shares, means 100% of company. That means in this case, you need to understand this. That means that's a company B, that's a company R, and the company B issued all of this because they're going to, company B owns 100, that means 100%, no minority, zero minority, okay? Just pay attention with me again and write notes for the example, and you have this example with you. You're going to read it again, and you have to continue to read and understand it, okay? What else is this example? That's a good thing, good example. The other information, that's information number 1, example 4, page 18, other information, market value per share. Look at this one here. Company B issued 240 shares. That's right. The market value, MEV per share, how much is it? It's given. That's 50 Egyptian pound. Okay? And at that date, which date? January 1st, at that date, the book value, remember again, the book value, BV, when I say book value, means BV of assets and the liabilities of R. Remember, we have company B and the company R. Asset and liability of B, of R, company, represent fair value. Okay, that means this one, asset, book value, represent fair value. What's that mean to you? That means book value equal to fair value, okay? Also, he's telling you any excess of cost over book value, look at this one, any excess of cost over book value, consider as a goodwill. Remember again, like example 3, and when you have goodwill, I'm going to amortize it, this time 30 years. Example 3 was 40 years. Just to go back again, example 3, this one here, what's the difference between example 3 and example 4? Example 3, there is no worksheet. Example 4, we have worksheet, and we have to prepare a state. Let me continue again. The good thing in this example 4, they give you the following information was made available for 2 companies as of December 31st, 2001. Okay, that means you have this one January 1st, this one here January 1st, and December. That means 1 year, 12 months. That's right. Look at the information here. The information here is mixed. Some information related to income statement, some information related to the balance sheet, some information related to returned earnings. Okay, that means again this information, we have some information related to IS, income statement, and some information related to SRE, returned earning, some information related to balance sheet. you need to know which is which one are going to use from this information. You have all of this. I need to classify which one are going to use, okay? Which one are we going to use? Look at this information one by one, okay? Look at again, cash, company B and the company R, investment in R. What besides this one? You put X besides this one. We'd like to know what this investment are. Usually, you need to know this one. And the AB means the account payable. And the CS means the common stock of company B and common stock BS. And RE, when? January 1st, beginning, January 1st, for company B and dividend for company B and the company R. Sales revenues, remember sales revenues belong to income statement. 20,000, 20,000. This one, cost of goods sold. Look at this one, cost of goods sold. COGS, cost of goods sold. Look at this one. This one means common stock. You need to know. This one means account payable. You need to know all of this. After this, operating expenses. When you have operating expenses, the operating expenses for this one, after that, the numbers, after that, income from R, this one very important too. Income from R, put X beside it, and inventory. Okay, you have all of this, and remember again, that's the example I gave it to you. This information, I call it mixed information. You need to classify it. Which one belong to income statement when I come to worksheet? Which one belong to return to earning? Which one belong to balance sheet? I'm going to show you this. We finish the example first. This is a good example to understand it. Let's go question number 1. I ask you, compute income from sub. Compute income from sub means compute income from R. Okay? That's 1,009. This 1,900. This one here, 1,900. Show me where this number come from. That's question number 1. Question number 1. I'm going to show you one by one how to do this. Question number 2. I ask you, that's here, I put X, remember I put X here, 1,900. I put X here, that means this one very important. And question number 2. Compute investment in R, 13,900. That, I put here X, X, X. And I'm going to write here 1, means the question 1. And I'm going to write here 2, means the question 2. You understand? Also, I ask you, show me how to get this number, 13,900. 13,900, compute investment in R, 13,900. In detail. In details mean you need to show me numbers, how you get that. Okay? Now, question 1, yes. Question 2. Question 3. Ask you prepare journal entries in B account box. Journal in B. Why B? Because B is the parent and they are subsidiaries. That means I need journal. How many journal entries? That means journal entries, general journal in company B. We need to know how many journal entries. What I'm going to show you the answer of this one. That's number 3. Number 4. I ask you. Question about prepare investment in our account. Oh, this one, when I say investment in our account, that means this one, you need to show me account. General ledger, GL. That means we have GJ, also we have GL. Okay, you need to know what's GJ, what's GL. You need to know this. Question 5, I'm going to ask you, this one, very, very important. Prepare consolidation worksheet. Remember, in part 2, I show you how to do it. The same way, but here it's more details. We have to classify this. How many items belong to income statement first? How many items belong to return to earning? How many items belong to balance sheet? And question 6, I'm going to ask you prepare consolidated income statement. I'm going to write beside it IS. I'm going to show you this. Question 7, I'm going to ask you, prepare consolidated return to earning, SRE. You need to show me this. I'm going to show you, but you need to practice at home. You need to do this at home. Just don't read it and like this. You have to practice. You have to do it many times. How I do this? What's the items for income statement? What the items here belong to? Remember, by order, income statement first, income statement first. Second goes to retained earning. Third go to the balance sheet. Balance sheet the same, like in part 2. Remember part 2, but we're going to add income statement and retained earning. Question 8. Prepare consolidated. Remember, each one I say consolidated, 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 balance sheet. That's what we have. It's a good example to understand this. That's okay. Let's continue. Let's continue. That's page 18. Page 19. Page 19. Would we have, let's go back again. Let's take this out. Page 19. Page 19, I'm going to show you how to answer this example. Remember, when I show you to answer, you need to pay attention and you need to look at each one for the content of each one. Look at question number 1. We have 8 questions. Question 1, compute share of net income from our company, which one 900. Where does this number come from? You need to know this. To answer this one, what do you need to know? This one, model answer, for example, 4, using equity method, yes. Consolidation worksheet, yes. And when I say 100% ownership, mean 0 minority, no minority. That's 100%, okay? That's why 100%, no minority. I show you step by step how to do it, step by step. Just you need to know it. You didn't have to memorize it, just step by step. First, to come to this number, look at my goal is to come to this number. Where does this number come from? Okay? Start one by one. Step 1. You need to find how much is the acquisition cost. Acquisition cost, 13,000. Where 13,000 come from? There's 200 shares time this one 50. 50. No, time 50. It's 50 market value per share plus 1,000. They paid 1,000 cash. That means if you multiply 240 by 50 and add 1,000, it gives you the acquisition cost or investment cost. After this, you're going to say minus book value, BV of net assets acquired. To get the book value of net assets acquired, I have 2 elements, common stock of R and the beginning with of R. This one here represent net asset. Net assets. Remember, net assets equal to shareholders equity. Shareholders equity, this one take 6,000, this one 4,000, that's shareholders equity. If you add this together, that means that's a net asset. That means the total 10,000. Now, you have 2 numbers, big numbers. The first one, acquisition cost, 13,000. Second one, 10,000. That's a book value of this as acquired. How I get it? Don't take it from asset liabilities, no, take it from, that's common stock of R. You take beginning retained earning of R, take them together, add them together, it gives you 10,000. The difference between this one and this one, we call it valuation differential, okay? After this, what are you going to do? Do we have difference between book value and no, they told you book value, book value equal to fair value. When they tell you this, that means valuation differential is a 0 because there is no difference. You come to the end, how much is the goodwill? 3,000. That's step 1. You know how to do the goodwill. You need to know this, how we did this in example 3, and I do here more details. Now we know we have a goodwill. What's step number 2? I told you, if you have a goodwill, what you're going to do with the goodwill? You're going to amortize it. Amortize it similar to depreciation. That means divided by number of years. The annual amortization of goodwill, you're going to take 3,000, divide by 30 years, it gives you 100 per year. That's what we call this annual amortization. That's what we have. We didn't finish yet. Remember again, I need to come to this number. If you come to this number, that means you answer my question. If you come to this one and this one only, you didn't answer you only part of my question. But you need to show me how I get this one, okay? I do it next one, page 20, okay? Look at page 20. We need to continue with a step. I told you that's a step 3. You need to come 1,900. Where does this come from? Here he is. First, step 3, you need to determine share of net income of R. We need to come 1,900, 1,900, 1,900. First, you need to find R net income. That's number 1, R net income. Where is 2,000 come from? You need to look at the information I gave it to you as example. You have sales revenues minus cost of goods sold minus operating expenses. How much the cost of goods sold? Sales revenues 20,000. How much the cost of goods sold? 15,000. How much operating? 3,000. All this together, it gave me the net. You need to do this yourself. You need, because this example, you need to know how to determine net income of R. If you know net income of R 2,000 multiplied by ownership percentage, which is 100%, it gives you the same 100,000. If you come 2,000, you're going to deduct the annual amortization of goodwill. It was 100, if you remember. It was 100. You come, look at it, that's what we need. If you get this number, that means you're right. Okay, for each one, you need to put equation. How I do this, how I get it, how I do this one by one, okay? Let's go question number 2. We finished question 1, let's go question number 2. Question number 2, he asks you, compute investment in R. Well, look at again, each one, I ask you, when I ask compute, that means calculation, mathematics. Compute the balance of this number, 13,900. Show me where does this number come from, 13,900. Show me one by one. To get this number, first, I'm going to write here number 1. You need to find the acquisition cost. I think we know this from the beginning. Acquisition cost, 13,000. Remember? And add number 2. Share of net income from R, which is this number. This number, share, I put it here, plus, minus dividend, 1,000. All of this, give me at the end the balance investment in R, 13. That's what we need. If you get this number, that means you're right. You're good. Okay, for each one, you need to come to this number. Where is this one? That means you're right. Okay. If you come to question number 3, remember again, that's a question 2. That's a question 3, remember? If you look at the example, question 3, we have journal entries in B accounting books. Company B, they're going to make 3 entries. The first one for acquisition cost, second one for share of net income, third one for dividends. Okay, let's do it one by one. Remember again, do it one by one. The first one, I'm going to debit 13,000, that's investment in R, credit common stock 12,000, and paid cash 1,000. Where does this come from? It comes from 240 shares times 50. 240 shares times 50 give you 12,000. Add 1,000 cash, it gives you that first one. You need to debit. Remember again, debit investment in R, and the credit common stock. Sometimes I call it common stock or I call it capital stock, the same meaning. Okay? Continue. Let's go page 21st. Right? Take a few seconds to write this down or read it carefully. Go page 21st. Page 21st. Take this out first. We still have journal entries. We did one journal entry first. Remember, we have 3 entries. One for acquisition. Second one, for 1,900, debit investment in R, credit income from investment in R, income from R. Okay? So 1,900, 1,900. The third one, what about 1,000? 1,000, debit cash, they receive dividend to cash, 1,000, credit investment. Okay? Now, if you look at this entry 1, 2, and 3, we have 3 entries. First one, investment debit. Second one, investment debit. Third one, investment what? Credit. That's right. That if I ask you the question number 4, that's question 4, here, yes. You have to know for each question what's the requirement. Question 4, difference. Question 4, I ask you T account. Question 3, I ask you journal entries. That mean debit and credit. Question 4, T account. When I say T account, that means GL, general ledger. When I say GL, that means you're going to open account. And the debit is this side, the credit is this side. That's right? Okay, now, what you're going to do, if you look at entry number 1, debit in 13,000, that's right, debit in 13,000. And in equity also exists. In equity, always debit investment acquisition cost or investment cost, and debit share of net income, and the credit dividend. Here is 13,000, 1,900, and credit investment. Give you at the end, that's what we need. If you get this number, the same number, that's 15,900. Okay? That's what we have. I'd like you to go back again, look at answer question 3 with question 4 to see what's the difference, what's the requirement, what I ask you for, you need to know this. Okay? Let's go for question 5 then. Page 22. Page 22, it's much easier now because we understand most of the information. That's we need to take some time to understand this. Okay? Make it simple for you and easy. I'm sure you know all of this before in part 2 and handout number 2. Question 5, remember again question 5, I ask you prepare consolidation worksheet. Worksheet, WSH means worksheet. Okay? We have this in part 2, you remember? In part 2 we have this, we discussed this. The same steps. Review again, handout number 2, part 2, and I gave you handout number 3 later, but at this moment, that's handout number 2. Step 1, to do consolidation worksheet. Step 1, you need to prepare valuation differential and goodwill under purchase method. Don't forget purchase method. Okay? Step number 2, enter the information of B company and R company. We have two, B and R, by order in income statement first, and SRE returned earning, and BS. I'm going to show you how you classify it. This example, it's a kind of classification. You need to know how to classify this. Okay? How to start, what's the element of income statement, what's the element of returned earning, what's the element of balance sheet. This one, very, very important. Step 3, very, very important. What is it? We're adjusting, when I say adjusting entry, means the debit and the credit. What's the debit? What's the credit? How many adjusting entries? We have this in part 2. Here, we're going to have 3 adjustments. Why 3? Later, I'm going to explain to you. Step number 4, minority. Do I have minority in this example? No minority. 0 minority. What, example 4, that's 0. Why? Because company B owns 100% of company R. After this, you come to the last step, last column in the worksheet, last one, step 5. This one, very, very important again. From this one, from step 5, you need to answer question 6, question 7, question 8. See? Very important. If you know how to prepare the worksheet, I'm sure you can answer this one. Okay, let's go one by one. What are you going to do? Well, I finished the worksheet. Yes, you finish it. But I ask you, prepare consolidated income statement. You need to take it from here. Prepare consolidated returned earning. You take it from here. you take it balance sheet. All of this. Note, in this example 4, right number here, example 4, in this example 4, no minority. When I say no minority, because B company owns all shares of R company. That's why minority is 0. You remember? I told you minority, no minority, but in this one. Okay. Now, note number 2. Note 2, worksheet adjusting entries. This was very important, very, very important. I told you we have 3 adjusting entries. In this example 4, we have 3 adjusting entries. Okay? The first one, to eliminate income from R. Income from R, it won 1,900, investment in R, make it debit, and the credit dividend, that's 1,000. If you look at the investment account, that's investment here, that's here 13,000, that's here 1,900, that's here 1,000. You remember this in account? You're going to eliminate this one with this one. Eliminate income from R, yes, with this one, credit dividend. When you make this debit, this credit, the difference between debit and the credit, how much? 900. This 900, I put investment in R. That means entry number 1, to eliminate income from R, you need to do it this way. First, debit income from R, 1,900. Look at the account. Income from R, look at in the account. This one. Credit dividend, yes, dividend. The difference between debit and credit gave me. The adjusting entry, I told you, adjusting entries, we do it for a reason. What the reason is to put company B and the company S as one company. Okay, adjusting entries, you need to know what's the reason behind the adjusting entries. No inflation, because B and S, B and R, we put them together. Company B and the company R, we put them together as one company. That means first entry, this one very important. That means to entry 1, you need to eliminate income from R. Okay? Continue. Second entry, page 23. Second entry. Look at the page and the number. Entry 2, page 23. Okay. Second one, we need to eliminate again, eliminate shareholders' equity of R. That's right. Look at shareholders' equity of R. We have 2 items. Remember at the beginning I told you common stock of R 6,000, return of R 4,000. If you remember 6 and 4, it gave me 10,000. Remember this 10,000 from the beginning? And we have a goodwill. Remember? We have a goodwill. That means you're going to debit all of this. Debit common stock of R 6,000. Debit beginning return the earning of R 1,000. And debit goodwill 3. If you take this, all of this 3, 6, 10, 13, that's against investment in R. That means that's always like this. Always like this. Example 4, example 5, you're going to see all of this. Okay? The last one. I told you we have 3 adjustments. Adjusting entries are very important. Later we're going to show you why and explain it. Adjusting entry here, number 3, that's number 2. ADJ number 3. Record the annual amortization. You know we have annual 100. That remember? Remember this 3,000 goodwill divided by 30 years. That means each year we have 100. This 100 I need to, each year I going to make this entry. Each year. For how many years? 30 years. Debit operating expenses 100. Credit goodwill. This one 3,000 divided by 30 years. Okay? It's clear to you? Take a few seconds, deep breath, and think about it, and see how are you going to do this. Don't memorize it again. You need to do it many times. Practice, practice, practice. Okay? Now, I like to go page 24. It's getting nice now. It's getting very nice. Okay? Relax. Relax again. Don't forget this one. Remember this worksheet? Don't forget it. We call it WSH. Relax. We have this in part 2. Remember in part 2? You need to know What is the worksheet? What? And why is the worksheet? How to going to use the worksheet? You have to know this. I think we explained this before. But today, I go explain more again. We're going to use this again. Like in part 2, we have only balance sheet. In this one here, part 3, we're going to have 3 statements. First part for income statement, IS. Second is for SRE. Third one for BS. See the difference between part 2 and part 3? In part 3, the worksheet, I go to divide it, 3 pieces. Income, you have to know what do you have in income statement, what's the element of income statement. Any profit from income statement goes to return the earning, you remember? Ending return the earning goes to balance sheet. You understand this. That's that first one. I'm going to show you step by step how to answer this one. That means this one here, the first column, this one first column, you need to know how to do it at home. In the exam, if I ask you, this one will help you. This one will help you how to answer any question with consolidation. Okay, any question. Let's go. This one here, it shows you need to write. I'm going to show one by one. First one, income statement. Second one, and handout number 2, it shows you, but only balance sheet. This one here, we have 3 statements. Second column. We have here, second column, we have 2 companies. Remember? B company and the R company. Remember? I'm going to show you. Worksheet adjusting into debit and the credit. That's right. And the minority, wouldn't have minority, 0 minority. That's what we have. That's what we have. I'm going to show you in detail, one by one, how I do this first, before I give you the answer. Let's go for just a few seconds again, and relax again, and try to see what you're going to do it. If you see this material is too much for you, please write to Hiba. We can do it in 2 classes, or 1.5 class, or let's see what. Keep in touch with Hiba as a course coordinator, as a teaching assistant will help you, and I will help you, and Marina will help you. All of us will help you. We like to you will have be happy. That's all. You have to be happy and work with you. 25. This one, 25. Look at it. I try to help you again. This is very important. Why I show you this? Why I show you this? Look at 25. Before you answer, you need to know how to make the worksheet. How to make it. I give you mixed information. Mixed information. I put it 3 pieces. This one here, first piece, 1. That's the income statement. Second piece, second one, that's this one, return the earnings. That's number 2, by order. And the last one, balance sheet. That's it. That means before you start, example 4, especially example 4 in the exam, I give you mixed information. Mix, I like to know, do you remember accounting 101? Accounting 1, accounting 2, you understand this? Do you understand company accounting? All of this, you have to go back accounting 1, accounting 2, company accounting, and if you don't understand, let me know, or let Hiba know, we'll help you. No problem. Just my goal is to help you. I'll let you finish, and you finish, and go to the market, job market. Let's start one by one. Look at how I put it. If you look at example 4, just remember again, example 4, part 3, very important. Example 4, part 3, consolidation worksheet. First, income statement. You need to know from accounting on what's the element of income statement. For company B, sales revenues, 20,000, 20,000. Income, you remember this income from R? I put it here, I put X. Because we're going to eliminate this. Remember, income from R. Cost of goods sold, I put minus. Remember, minus. Operating expenses, minus. If you get this one, 20,000 plus 1,900 minus, it gives you net income for B company, 6,900. Net income for R company, 2,000. Remember this, I show you what is net income, how I get net income. Okay? We'll finish it. That first step, you need to classify this. For this example, you need to classify it. Let's go, second one, step return the earning. When you have a statement of return the earning, start with beginning return the earning. Yes, beginning, okay? I put beginning two lines, one for company B, one for company R. Look at here, B and the R. Why? I'm going to explain this to you. Net income, 6,900. This 6,900, I put it here. Remember? And 2,000, I put it here. Remember, do you watch me with this one? That's 6,900, 2,000. That means beginning retained earning, add net income, minus dividend. Dividend for company B, we have this minus 4,000 and this minus 4. At the end, this one, ending return for company B, how much? 4,900. For company R, how much is it? 5,000. Okay? The last one, that's easy now. We have the last one. And for this one here, cash, balance sheet. You have assets, cash, 7,400. Inventories, 2,411. Investment, I put here X besides this one. Investment, we need to eliminate this. We need to eliminate this. We put in this, okay? And goodwill. Do I have a goodwill? We'll find out. That's why I put here. That's a goodwill because we'll find out. Total assets, because in this example, if we have a goodwill, we're going to put it here. Total assets. Don't put any goodwill now. Just put total assets. This total assets here. 1, 2. This one. 44,900 and this one 15,000. That's total assets. Total assets equal total liabilities and the owners. This one 44,900, this one 44,900, this one 15,000, this one 15,000. That's right. Something else very important. If you look at ending returned earning, 14,900. Look at 14,900. This number 14,900. I keep going down, 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 down. I put it here, ending returned earning. And for this one here and this one here, go down, 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 and 5,000. That means you can say net income goes to returned earning, with ending returned earning goes to the balance sheet. It has to be clear to you. It has to be clear to you to answer this one. Okay? And I take you a few seconds just to think about it and to classify it. Don't memorize it again. You have to go back accounting 1, account 2, company accounting, how to make income statement, how to make return the earning, how to make the balance sheet. Okay? We still have 2 pages for this one. And page 26. Page 26, look at here. I try to explain, but I will explain again. More detail. This one here, it gives you a complete answer. That's what I need. If I ask you in the exam, prepare consolidation worksheet. That's it. That's it. Complete. Do I have minority? No minority. That means no minority. I'm going to write 0. And I'm going to write here this one. In this example, no minority. That's right? You need to make it clear this way. Also, be careful with something here. You have to look at this one. That's one. And we have another one, this one here in the balance sheet. We have investment, okay. Second, after we do this, remember again what happened here. I put the 3 adjustment here. Remember? Adjustment number 1. I have 3 adjustment number 1. Debit income from R, that's right. And the credit, go under credit number 1. Go number credit 1,000. Yes, that's a debit. That's number 1. Look at number 1. And you still have 900. I put it at investment. That's 900. That's all of this entry number 1. Adjusting entry number 1. Adjusting entry number 2. Look at number 2. What do we have adjusting entry number 2? If you look at it, we have for this one here, returned this one here, debit first, debit. For company R, put X, debit, that's 6,000. And debit, 4,000 for company R, that's debit and debit, remember? And you have to add goodwill, that's 3,000. All of this debit, remember, all of this number 2, debit, debit, and debit, okay? That's all this number. All of this debit, that's right. 6, 4, 13. What's the credit? Investment, credit. That means under investment, you're going to see 2 numbers. 2 numbers. What's 2 numbers? 900 for number 1 and the 17th of number 2. If you take these 2 numbers together, it gives you 13 900. That means that it should be same 13,900. That means you eliminate investment in R. Okay? What happens this one? This one, income from R is a credit because that's revenues. I make it debit. That means we eliminate this one. If you look at the last column here, this one we eliminate this, and this one we eliminate this one. That means these two numbers we eliminate this. Okay? Let's go for the last one. The last column, very important. Why? Because from this one you're going to answer all of this. Okay? Now, you need to go back again to consolidated sales revenues, 20 plus 20. Consolidated cost of goods sold. Operating expenses. Remember, operating expenses, this one debit, this one debit, and this one debit. Debit, 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 add 8,100. And net income, that's net income. Something very, very important. Under equity method, this one 6,900 and this one 6,900. If this number, this one we consolidated net income. Consolidated net income, it should equal to parent net income. All under equity method, if this number 6,900, this one 6,900, this one, that means you're right. Okay? Go second one. Second one, you have to put this one down, 6,900, you have to put it down, you remember? You have to put this one down, you have to put 2,000 down, you have to put this 2,000 down, you have to put this down, and this one here, 6,900, put it down. Okay? Let's continue, return the earning, the same thing. This one here, we eliminated R. There's no R. There is no R. What we're going to do here, that's when here, I'm going to show only company B as a parent. Company B, they're going to show 6,900, yes. Going to show 4,000, yes. And 14,900, okay? And this one here, that's 14,900, that's ending. This ending 14,900, I put it here in the balance sheet, remember? 14,900 in this one. When you come to balance sheet, we come to consolidated cash, 704, consolidated inventory, 35, and investment, no, 0. Goodwill, remember, goodwill, 3,000 minus 100, it gives you only 2,000. What's most important to you? This number, we call it consolidated assets. It should be consolidated liabilities and shareholder equity, 48,900, 48,900. Okay, this one will help you. Let's go back again, page number 7. To almost finish this one, example 4, page number 7. Okay. What do I have in page number 7? Page number 7, so he said, okay, you finish the worksheet, go to the last column in the worksheet. Go to the last column, yes. I ask you, question 6, prepare consolidated income statement, IS. Prepare consolidated SRE. And the last one, the balance sheet, I'm going to show. Start one by one. You take it from the last column. Consolidated sales revenues first, minus cost of goods sold. It gives you gross income, global profit, minus operating expenses. All of this from the last column. Note, consolidated net income, 6,900 equal to parent net income, which is the same number, 6,900. That's very, very important. Second one, answer question 7. Beginning return 20,000, add net income, income statement, this one, deduct the dividend, it gives you this one ending. Ending return equal to ending consolidated equal to parent. Look at the same thing, equal to parent. This one here note, this one note, very important. Okay, you need to look at again and do it. I welcome question. You can ask Hiba or ask me later for this one. The last page in this part, the last page in the example 4. We're still example 4. Last page example 4. That means example 4. That's the last page example 4. Okay. Last page, I take this one here again. Question 8. Question 8, yes. Question 8. Consolidated balance sheet. when you have a start with asset first, that's an asset. Cash, consolidated cash, inventory, and the goodwill give you this amount consolidated assets. Account payable, 9,000. Shareholders' equity, we have common stock of company B, not R, no R, only B, and return ending of B. This together, then be sure this number, if this one equal to this, that means you're right. Okay? That's one here. At this time, we finish example 4.